Guys.
So, hello, uranium friends. We've got good old Ben from Eastwesttrading. We're going to start maybe putting something together, both of us kind of working out, going over the charts together. So, Ben, why don't you say hello, buddy?
Yeah, thank you very much for having me, and hello everybody. So this is quite exciting.
Yeah.
A bit of a get together here, bit of a little fireside, and rifle through some charts and see what we can see, and put our heads together. Two heads are better than one. So, mate, shoot, what are you seeing here with Dennison? We're out here on a monthly, right, on a big one, the big chart.
Yeah. So, this, before we started recording, you had me pull it up, and the first thing that just popped up, I'm like, look at the monthly chart. We got a cup and handle forming at the moment, right at the top of these, at the top of this volume shelf here. So there's a chance that if it pushes through this volume shelf here, we could get some movement out of Denison. It
Yeah.
actually looks pretty good.
Yeah, it does, and I still believe that on the big chart that it's still, we are still tracking. I mean, that's very basic, but we are still tracking higher. It just becomes, it's pretty obvious to everyone, right? It was just this area that we've got to beat. But it's not a bad thing that we're just having a little pause here. I think just to gather ourselves. Just before we can carry on for the next leg. So, you know, we had the initial run, we had the correction, and now, I mean, I sort of still remain of the view that we've got, this move up that we're just going to correct a little bit before we kick on and go further. That's kind of how I'm viewing it. I mean, I don't know, of course, but there's nothing for me to say that's not going to be the case. And as you point out, that nice sort of cup and handle formation is just another sign that once we get enough time go by, that we can expect the market to extend further.
Yeah, well, you look at it this way. The nature of a cup and handle, right? So what is it? It's a continuation pattern. So you've had this consolidation, really, this monthly consolidation has lasted for a long time, right?
Yeah.
So the second part of the monthly cup and handle, of any cup and handle, is the nature of it. It's a bull flag, right? So what we've got now is, here's your pole, and you've got your flag starting to form, right?
Yeah.
So these are the things that you really want to start to see. So it's a great setup, and this is actually a perfect monthly cup and handle because the nature of it. If the true technical analyst wants to do it properly, you're not the right side shouldn't overtake the left, and we've got that here. So you're getting that monthly consolidation, and
Mm.
if we zoom into the weekly, just kill this. Kill all this stuff. If you zoom into the weekly here, you've got, it's just, you got a great little setup where we're just hoping, let me get the glasses on. We're about to get, well, yeah, we got to test this. Once this weekly high, this of 197 gets taken out, we can assume that it might start chopping about this way and getting up towards breaking that big resistance. So we've had a daily trend change as well, right? So
Yeah.
the higher low is set here at 181, and now it's all about this level of 197.
Yeah. Yeah, definitely. I think in the next at least couple of weeks, I mean, that's just going to be the area we beat. I mean, I've sort of said that I'm sort of the opinion that maybe we go up and then we sort of maybe test this top and maybe just bounce around this for a little while, um, before we go on. But I mean, of course, that remains to be seen. But I mean, you're dead right in what we've said. I mean, that's all sort of hearsay. What we do have, as you said, is a trend change. Okay, so we just need to get above that, and then we've got something, I think, very firm that we can work with there, right?
Absolutely. And the other thing that I like to see is, and I talk about this in my videos a lot, and I'm a big moving average guy, and I love when, oh, sorry, I love when they reconcile, they kind of stack up again, right?
Mm.
And we're seeing it here now. You see how these moving averages, they like to spread out and then they reconcile and they bunch up again. Here it was resistance, but once it got over them again, acted as support, and off it went. All right. So we're starting to get the same exact situation that we see over and over in the space. So I like the way that looks as well.
Yeah, I like that. I mean, that you often see it, right? That coming together of the moving averages like that when they all bunch up. That to me, that just means like there's a lot of friction build up, and the market's just preparing to release that friction and bust away. And yeah, we're seeing that the way that the market's just ranged up and bunched up. It's like it's gathering itself now. The way I look at it, every way I dice it, it just looks like there is going to be more upside. But of course, with these things, they never happen as quickly as everyone wants. But I just think as long as you can just be patient with your time, that there's no reason to think there's not more upside coming. It's just a matter of withstanding some of this sort of range bound stuff. If you're a long-term investor, just withstanding the range bound stuff that's just got to test you out mentally for a while, as we've sort of got through here. And like I said, there's nothing to say it just doesn't sort of start doing that, and that that's possible. But I just caution people to just be wary that we might start doing this, and it might just frustrate you a little bit longer before it goes. But I think one way or the other, eventually, it's going to go.
The other thing that I would like to point out, and falls right into what you're talking about with this consolidation here, is that we've got these volume nodes here. This one's going to act as resistance, right? So,
Yeah.
but here we have this big volume profile. I mean, this is where, this is supply. This is where the buyers are in. They're buying here, and you can see it as clear as day.
Yeah.
But we do have some overhead supply that we might need to get through here to get through that. But that setup, which will fall exactly into what you're talking about with the, maybe some chop all through here. That's what we're looking at. So we might break this range and then struggle a little bit right around like this 205, 210 area.
Yeah.
You might see some sideways action there.
Yeah, that's why I'm wondering if we just go, and obviously, like you said, you've got this, which ties into to sellers here. So, we come up, we sort of bust against that, and maybe even that's why I'm just wondering if we do that, and then we sort of do this again, and then come do this, and then go. I mean, I don't know, but I just wonder if there's going to be a fairly broad battle zone here before we kick on again, because just the way I look at it, I mean, the overall trend that we've had, sorry, pardon my freehand drawing, would just need a bit of time to just digest that before we gather and go again. I mean, I don't know. Look, maybe for all we know, this is going to be enough, and we're going to start to break up, and that's it. I mean, I'd be surprised if that's all we get, but we can't rule it out. But all we can really do is deal with what we can see right here and now. And as you've said, trend change threatening the current range before we go on. And then of course we've got to just test to see how the market responds up there. I mean, that's just kind of what all we can really do here on the hard right edge.
Yeah, and the other thing I guess that we would want to try to be cognizant of is this possibility of a weekly head and shoulders formation, right? That's horrible.
Yeah,
horrible drawing.
Yeah, no, I get it. I've seen what you're saying. Yeah, I have sort of looked at that too and thought it's a little bit crucial there. Like it needs to just get up there, because the other danger, of course, is that what we're actually getting here is something like that, where it's going to go a lot deeper. We don't know that that's not going to eventuate yet. And then you're talking about a big retracement of this whole move. So you can never rule it out, but I'm not anticipating that's what's going to happen. But and maybe we just come back and we just want to, the market wants to tap into, like, say, this and this little volume shelf, and it just becomes about this sort of area there that we don't know that's going to happen. But I just think you can't rule it out, even though that's not what we're expecting to happen.
Well, and the thing is that this is why technical analysis. This is why I don't like when guys make predictions. But you know, there's a case for bulls here, and there's a case for bears here.
Yeah,
And
definitely.
the truth is that the space in general is duking that out right now.
Hmm.
You know, there's some signs that say, hey, listen, it is a confirmed weekly downtrend at the moment. You know, so it needs to kill that. And the
Yeah.
first step is to get over $1.97. The good thing is that it's regained the weekly 12 EMA, which everybody knows, even you, Ben. I
Yeah.
talk about it all the time. It
You
is a
do.
metric that the space loves to use. So
Yeah.
that's a positive sign.
Yep. Yep. In
And you
fact,
have
I'm
the
even
monthly,
gonna.
and you still have the monthly cup and handle.
Yeah. Yeah. So as you say, that there's plenty of reasons to be optimistic, but there's just also various markers there that would just make you cautiously optimistic because it hasn't proven itself just yet. It's looking good, but there's just a bit more water to go under the bridge before you come. I mean, you could get aggressive and just get in there now, but I think it's building nicely if you can just be a bit patient and wait for those signs. And you might have to give up a little bit of, sort of more rather than entering around here, but sort of in this range that's in between $1.70, $1.90, maybe you've got to forego a little bit of that and not get in until it's sort of above its high. Just as a bit of insurance premium that you're on the right track. But that's up to the individual investor. Or if you're trading, well, there's every reason to think that if we can break out of this range, that we won't go and revisit those tops relatively soon. That's how I would read it, because like you said, we've got that trend change on multiple time frames, and it's now just about beating that weekly sort of downtrend that we're kind of in. But we're very close. I mean, maybe we do it tomorrow. Maybe we bust through and we can have a nice weekly close and we can sort of negate that downtrend. But we're not there yet. So we keep watching.
Yeah, and it seems as though spot price is starting to pick up again. It seems as though it may have found a little bit of price discovery here. Time will tell on that, but the approaches are, and everybody knows because I posted this. I got picked off on this little stop hunt right here.
Oh yeah.
Definitely got picked off, and it's just, but it's the nature of things, especially with someone who's a trader, more of a trader like me. I mean, I have cores in Denison, so it doesn't matter. These were just add-on attempts. But if we lose this range, we're going to be starting to look down here. I mean, that's what it comes down to. So the low risk plays are down here in the $1.70 area, and the conservative players are going to say, all right, let me wait for a breakout, possibly a back test of that breakout area. Also, there are people who play it that way as well.
That's probably how I would do it personally. Because I think it just defines your risk really nicely. And, but you just got to be then aware of the fail breakout to the top side. It comes back and tests that. But, you can keep your stop pretty tight, I would have thought, if you're playing for that breakout, if it does break out, coming back to test, it just becomes the area. And then where do you want your stop? Well, think about your risk reward, of course, but I don't think you need to. You might even just split this range in half, 50%, and you might just have your stop below that, because if we sort of get below that, then the chances are we're probably back into this range. It was a false breakout, or we're going to drop through it. So, sort of trying that in the anticipation that we're going to come up here. I mean, that would be how I would approach it. But I mean, there's a million ways to skin the cat. So, you've got to do what's right for you. But that would be one approach, one of many approaches you could take. But that's how I would do it. Yeah.
Yeah, that's it really comes down to risk tolerance, right? So
yeah,
I'm more of a low risk bottom fish player.
Yep.
But there is plenty of people that this is their setup. This is their bread and butter. They wait for the breakouts and they wait for the back tests. Even sometimes they might take like a half a position on the breakout, right?
Yeah.
And then if it back tests, they hit their other half, and then they're going to put their stop below the lows or into this moving average stack, or even over here. That becomes a matter of risk tolerance and position sizing, right? So if your position is small, you can widen out your stop a little bit, right? So most of the people that are working this space are longer term focused people, right? So, but they still have the theory that they should, buy the dip on these drawdowns. Well, this drawdown is here off of this top, right? The drawdown was here. So anyone who thinks they should be buying dips, this is the spots where they should be looking right now, And if you're wrong, you're wrong. It breaks down these key levels, and you just get out and you wait for the next opportunity. I mean, that's kind of the way I approach it,
That's how I do it.
The ETFs, though, real quick, we'll touch on it before we skedaddle. They're making some nice work, right? So
Yep.
we've got some trend changes on URA, URNM, and URNJ. So it pays to watch, right? Denison is in all three of them.
Yep.
And it's one of the largest holdings in all three of them. So it pays to watch these ETFs.
Yeah.
And that's progress. We're going to see what happens with these weeklies.
Yeah. I mean, look, no guarantees. But if you just go back to your your ETF charts there, what I like is hammer, sort of hammers, just quick pushes down, is those stop runs, those flush outs. But what we've got is, the trend forming. So, that's a good sign for me that, I mean, there's no guarantees that that's the bottom, of course, but it's a good sign that I think in the short term, it's they're pretty decent bottom. Below those levels would be pretty safe places for stops, because I think if we get back below those, then we're probably going a fair bit lower. So I think for me, stop placement is about, if you get stopped out, it's because you're definitely wrong. You don't want to get stopped out because you just had your stop in the wrong position. You want to be stopped out because you're long and the market is going down.
Yeah. And, if these levels break, now you're looking down here.
I would think so. Yeah.
And the same thing here. Like, we have these levels. If they break, we're starting to look down here. It's going to be the next area where you're going to be looking for support.
Yeah.
And it's the same deal with URNJ. URNJ a little bit less on the price data because it's a much younger ETF, but it's the same deal. I mean, these all three of them are kind of following the same script.
Right. Yep. I agree. They are. So, I would say that, to sum it up, we're looking good. We've got some good lows in. We've got some good trend changes. We just need to clear, through that weekly. We just need to clear through that zone to sort of just push up and retest those highs and find our feet. I think we do that. Then we're looking pretty good. I think we're looking pretty good. So
yeah, it's all about these spike highs that we had on in early March, right? They all have it, and it was just a huge rejection. That was a devastating rejection for the people in the center. That I know, but yeah, I mean, it's typical, right?
Yeah, it wasn't good. I mean, I thought at that stage, I thought, wow, this is pretty good, but the way that it rejected was not. But anyway, look, we're very close to clearing back through that. So that's definitely a good sign.
Yeah, man. So Denison, monthly cup and handle on watch. And remember, with these patterns, the higher the time frame, the more powerful they are, right? It might take some time for them to play out, but it's I'd rather see a monthly cup and handle than a daily cup and handle, if you know what I'm saying.
Oh yeah, I hear you, brother. That does look quite good to me. So I think that all ties in pretty well. And there's like we were saying, there's no reason to expect there can't be more upside. I think the upside has got better odds than the downside, definitely. So we're nearly there. You just got to hang on. It just might take longer than you want, as these things usually do. So anyway.
Yeah. So even when you pull up a 3-month chart, a quarterly chart on Denison, that's a quarterly bull flag cup and handle, right?
Yep.
So it's there, and it's getting to a point. And look, there's just no resistance up here when we get up here. Yeah, sure, there's levels. There's previous price action levels, but look at this. There's just there's no bag holders. You might have some bag holders up here in the $3 range, right? But that's it.
Yeah.
So,
but hey, if you're still holding from $3 and you've sent it down to what, 30 cents, why would you get it out now? Just hang on. You've already lost all your money. You may as well it's all just a bonus from here. So anyway,
And look at this also. Look at the increasing volume every quarter.
yeah, yeah, just creeping up. The interest is growing as the story
Yeah.
sort of gains traction. So it all looks good. It all looks good.
We've got a solid floor here too.
Yeah, we do.
You know,
We
so
do.
it's when if things go terribly wrong in the space and Denison comes down into this dollar range, it's a buy signal. It's to me, it's as clear as day. So when everybody's screaming and crying, I'm buying. That's what it is. You
Out on
know?
the streets, right? It's when you buy.
Yeah.
So
Yeah,
they
yeah.
say. All right, mate. Well, that was great.
Yeah, good times.
Yeah, that's great. So hopefully we can do some more of these videos, and hopefully people like them. Get in there, like my man's channel, hit the subscription button, the like button. We'll do some more.
Yeah, check out Benny's channel on Eastwesttrading on YouTube, and what am I, Red Devil, I think, or something like that?
Yeah,
I don't
that's
even know
right.
what
That's right. So
I
I'll definitely have you on my channel in the near future as well, and we'll rap about another stock.
Yeah, yeah.
Good to talk,
All
man.
right,
See you soon.
Benny, good times. I know your market's probably opening up soon, right, brother?
Yeah, about another hour, but yeah, still got to get out of my pajamas.
Yeah. They brush the teeth, eat some breakfast, and what you should be doing, bro, is hitting the gym in the morning.
Yeah, you're right. You're right. All right, man. Good to talk.
All right, over and out.
See ya.